Gold just shattered its all time high. For thousands of years, it's been the undisputed champ, the one thing you could always count on to protect your wealth in a crisis. But while the ancient metal celebrates a volatile digital challenger, Bitcoin is stepping into the ring, a whole new generation of investors claims that this digital gold is the real key to protecting your wealth in the future. So, who's right? Is the old king glittering on his throne still the best safe haven? Or is it time for the new contender born of code and lightning to take the crown? The world today feels like it's balanced on a knife's edge. Geopolitical tensions are simmering, inflation is proving stubborn, and trust in traditional financial institutions feels more fragile than ever. In this storm of uncertainty, the search for a safe harbor, a true safe haven asset, has become more critical than ever. You work hard for your money. The last thing you want is to see its value get eroded by forces beyond your control. That fear is what brings us to this fundamental debate. It's the seasoned heavyweight champion versus the explosive, unpredictable challenger. This is gold versus Bitcoin. To get gold, you have to get history. And I'm not talking about a few decades, I'm talking about dynasties. For over 5,000 years, from the pharaohs of Egypt to the emperors of Rome and the treasuries of modern nations, this gleaming yellow metal has meant wealth, power, and permanence. It has outlasted every empire, every currency, every government that has ever existed. That isn't just a track record, it is the definition of a store of value. The first and most powerful argument for gold is this unmatched history. It requires no faith in a new technology, no understanding of complex code. Its value is ingrained in our collective human psyche. It is tangible. You can hold it, feel its weight, and store it completely off the grid, safe from hackers and network failures. This physical nature gives it a unique sense of security and privacy that no digital asset can ever truly replicate. But gold isn't just some historical relic. It's a modern day powerhouse. Let's talk about how it performs in a crisis. During times of economic turmoil, investors flock to gold. Over the past 25 years, it has delivered a staggering return, and in moments of acute crisis, its reputation is reinforced. Amid recent global uncertainty, gold has surged to over $4,000 an ounce, proving its mettle time and time again. This isn't theory. When markets panic, gold tends to stabilize, acting as a bedrock for a portfolio when everything else is sinking. And who are the biggest believers in gold? The very institutions that control the world's finances, central banks. While commentators debate Bitcoin, central banks are on a historic buying spree, adding thousands of metric tons to their reserves. Nations like China, Poland, and Kazakhstan have been aggressively increasing their holdings. Why? They're diversifying away from the US dollar and other fiat currencies. They see gold as a neutral, durable, and universally accepted asset that isn't subject to the political whims of any single nation. In a monumental shift, for the first time since 1996, central banks globally now hold more gold than US treasuries. Think about that. The most powerful financial institutions on earth, with the longest time horizons and the greatest need for stability, are not just holding gold, they are accumulating it at a record pace. They see it as the ultimate insurance policy against a fragile financial system. Finally, there's the rulebook. Gold has a well established and understood legal framework across the globe. There's no uncertainty about its status, no risk of a sudden regulatory crackdown that could erase its value overnight. It is a fully mature, globally integrated, and legally sound asset. The case for gold is a case for certainty. It's the belief that 5,000 years of history is a better predictor of the future than a decade of volatile, albeit impressive, performance. It's the venerable champion, the proven guardian of wealth that has weathered every conceivable storm. Now let's turn to the challenger. Bitcoin is everything gold is not. It's new, digital, volatile, and to its fans, it's infinitely better suited for the 21st century. Where gold represents the old world of physical wealth, Bitcoin represents the new world of digital scarcity. The first and most electrifying argument for Bitcoin is its potential for asymmetrical upside. Gold is a mature asset with a market cap in the many trillions. For its price to double, it would require a massive influx of capital. Bitcoin, despite its meteoric rise, is still a smaller asset, giving it far more room to grow. It's like comparing an established blue chip stock to a high growth tech startup. One offers stability, the other offers explosive potential. For investors with a long term view, this shot at life changing returns is Bitcoin's primary allure. The source of Bitcoin's value is its most revolutionary feature: verifiable digital scarcity. Gold is scarce, sure, but we don't know exactly how much is left to be mined. New discoveries could, in theory, increase the supply. Bitcoin's supply, however, is fixed and unchangeable. There will only ever be 21 million Bitcoin. That isn't a promise. It's a mathematical certainty enforced by a global decentralized network. It cannot be changed by any company, government, or central bank. In an age where governments can seemingly print money without limit, leading to inflation, Bitcoin offers an escape to a system of absolute predictable scarcity. After the 2024 halving event, the rate of new Bitcoin creation fell below the average inflation rate of gold supply, making it, by this metric, the scarcest asset in the world. This digital nature also makes it the most mobile asset in human history. You can send $1 billion in Bitcoin across the planet in minutes with no bank or government permission required. A similar transfer in gold would be a massive logistical headache, taking weeks and costing a fortune. This makes Bitcoin a uniquely sovereign asset. It can be held in your head as a memorized seed phrase, making it incredibly difficult to confiscate. In a world of increasing financial surveillance, this represents a powerful form of financial freedom. But maybe the biggest game changer has been institutional adoption, supercharged by the launch of spot Bitcoin ETFs. For years, Bitcoin was for tech geeks and retail speculators. Now, the largest financial institutions in the world, like BlackRock and Fidelity, are not only endorsing it, but providing easy, regulated access to millions. In 2025, institutional demand has exploded, with these entities buying up Bitcoin many times faster than it's being mined. Digital asset trusts and ETFs now hold a significant percentage of the total supply, creating a steady fire hose of demand. This isn't just adoption, it's the mainstreaming of a new asset class, adding a layer of legitimacy that was previously unimaginable. The case for Bitcoin is a bet on the future. It's a bet that in an increasingly digital world, the ultimate safe haven will also be digital. It is a hedge not just against inflation, but against censorship, seizure, and the failures of a centralized financial system. It's the disruptive challenger, offering a revolutionary, if risky, alternative to the old guard. So we have the champion and the challenger, one built on history, the other on code. But to really know which is the better safe haven, we have to stress test them. We have to look at their weaknesses. This is where things get interesting. First, the elephant in the room, volatility. Gold's price moves are typically slow and steady, providing the stability that risk-averse investors crave. Bitcoin, on the other hand, is notoriously volatile. Its price can swing 10 to 20% in a single day, and it has historically seen brutal drawdowns of over 70%. Just recently, as markets reacted to geopolitical news, gold held its ground near its all-time high, while Bitcoin saw a sharp crash. For something to be a safe haven, it has to provide safety during a crisis. If your asset crashes at the first sign of trouble, can it truly be called safe? Bitcoin supporters say this volatility is the price you pay for its incredible growth, and that over a long enough timeline, the trend is undeniably up. But for someone needing to protect capital in the short term, this volatility can be a nightmare. This brings us to the correlation question. For years, Bitcoin was sold as an uncorrelated asset, something that zigs when the stock market zags. But as institutions have poured in, that's changed. Research now shows Bitcoin is highly correlated with high growth tech stocks, like those in the NASDAQ 100. This means during a market-wide sell-off, Bitcoin is more likely to fall right along with stocks, making it less effective as a true diversifier. Gold, in contrast, often moves inversely to the stock market, providing a much more reliable hedge. Next up, regulatory risk. Gold's legal status is settled. Bitcoin lives in a gray area. While countries are starting to write the rules, the landscape is a patchwork of different and often conflicting regulations. The risk of a major government changing its stance or banning exchanges remains a real threat. Supporters believe Bitcoin's decentralized nature makes it tough for any single government to stop, but a coordinated crackdown by major economic powers could seriously hurt its price and adoption. Finally, the battle of security, physical versus digital. Gold's physicality is both a strength and a weakness. It can be held in a private vault, but it can also be physically stolen. Storing a lot of it means trusting someone else, which has its own risks. Bitcoin is purely digital, and its security is a new paradigm. With a private key, you are your own bank. This grants ultimate freedom, but also ultimate responsibility. Lose your keys, and your Bitcoin is gone forever. Store it on an exchange, and you're vulnerable to that exchange getting hacked or going bankrupt, which we've seen happen many times. The security risks for both are real, but they are fundamentally different. One is a risk of physical force, the other of digital error. This head-to-head reveals a crucial truth. Their greatest strengths are also tied to their greatest weaknesses. Gold's physical nature is tangible, but makes it clunky. Bitcoin's digital nature is portable, but exposes it to new risks. Gold's stability comes at the cost of lower growth, while Bitcoin's explosive growth comes with terrifying volatility. After weighing the evidence, pitting the ancient guardian against the digital disruptor, it's time for the verdict. But in this showdown, there is no simple knockout. The winner isn't the asset itself, but the investor who holds it. The choice between gold and Bitcoin is a choice between two different philosophies of protecting wealth. It all depends on your timeline, your stomach for risk, and what dangers you're trying to guard against. If your main goal is capital preservation in the short to medium term, if you're near retirement or just can't handle wild price swings, then gold remains the undisputed champion. Its long history, lower volatility, and proven performance during recessions make it the superior tool for weathering immediate storms. It's the anchor in the storm. If, however, your main goal is long-term growth and you have a high tolerance for risk, Bitcoin presents a compelling, if speculative, case. Its potential for outsized returns is unmatched, and it serves as a powerful hedge against a future of endless money printing and financial censorship. For a younger investor with decades to ride out the roller coaster, a small allocation to Bitcoin offers a shot at exponential growth that gold simply cannot match. It's the rocket ship, promising a trip to the moon, but with a real risk of blowing up on the launch pad. This leads to the conclusion that many sophisticated investors are now reaching. Maybe you don't have to choose. A barbell strategy combining the two might be the smartest approach. Hold a core position in gold as your stable foundation, your true insurance policy, then add a smaller, carefully considered slice of Bitcoin to capture that explosive upside. This way, you own both the past and the future of money. You're protected by the 5,000-year-old guardian while also having a stake in the digital revolution. Gold is for protecting the wealth you have. Bitcoin is for creating the wealth you hope to have. They serve different roles, and in a truly diversified portfolio for the modern age, there may just be room for both. Now, I want to hear from you. This is the biggest financial debate of our generation, and there are smart people on both sides. In this ultimate showdown, are you Team Gold or Team Bitcoin? Are you stacking bars or stacking sats? Let me know why in the comments below. We all learn from each other here, so let's have a real conversation. And if you found this breakdown valuable, do me a favor and hit that like button and subscribe. We go deep on the biggest questions in finance to help you navigate this crazy world. Thanks for watching.